Good morning, my young adults. I am excited to be with you guys today. I have a doozy. Yeah, I've just been going back through some things and I want to look today basically at an ETF uh, that I think is a very, very good ETF for young investors, that's getting into the market and they want a steady place to put their money. I teach you guys to buy fractional shares. You don't have to buy a whole share. But this is really a great place to put your money if you are a young investor. And that is none other than, the Vanguard, S&P. Yeah, the VOO is the ticker symbol. And guys, I really want to just bring this to you guys' attention because not only if you invest your money in the Vanguard, not only are you going to make money, but I'm going to open a bit later in the presentation to give you guys a cheat sheet. First of all, on finding out what's in the Vanguard, and then we're going to open it up and see the companies that's in it, which is great investment opportunities that I am 100% sure that if you guys learn how to buy these companies on the dip, you're going to make a whole lot of money. The purpose is not to show you, well, I'm going to show you, well, let's just look at it real quick. Year to date, uh, back then, about a year ago, you could have got this for $509.49. And we see, I like to always show you guys the trajectory up to where we are now. I think it's up to around what, 656.42. Has grown over the past year because if you look back year to date, you can see you know, the ups and downs of the market. You know what I mean? The ups and downs of the market. I did show it to you guys earlier down in the fives. I think it starts off year to date though, up shoots 1.82% to six started off at 632.46. And it kind of ran sideways, year to date, and then it dipped all the way back down to 580. That would have been a great place to buy. You guys need to be writing those dips down like that. Because if you'd have got into it a year ago at 580, we can see 3 months ago, uh, down here at 580, it started its trajectory back up. I keep telling you guys that the market goes upwards. So you could have made a lot of money from 580 all the way up 3 months ago to 656 still. Okay. Then we go back a month ago and it just continued to rise. See that? 1 month ago, all the way up to 656. It's still its all-time high 64. And then one day ago, yeah, it's still around 656. My point in showing you guys just this far is that it's not just the fact that a year ago you could have got it for $100 or something like that cheaper, and made a whole lot of money just by putting it in a safe place like this, totally safe place because it's the top 500 companies in America that's inside this ETF. And so what we're going to do is we're going to go down a little bit and we're going to look at this ETF because I always like to open it up to you guys. And we're going to look at the ETF, what's inside the ETF. See that? What's in the fund is what really counts. And if you guys if we just stop there, we see that Inside this particular ETF, you have 35% technology, 12% finances, 10% consumer services, 10% consumer uh, cycles, 9% healthcare, 8% industry. This is the breakdown that's inside the ETF, okay? On the percentages. It goes all the way down to basic materials down here. 1.91% of basic materials is in it. And you can open it up. Say we want to open, we can click on that last deal right there. That's that basic, that's that 1.9. And you guys can open it up and read about that, okay? You can open this ETF up and read about all of this and learn what you're invested in. I want you guys to become learners of the craft, because as you begin to learn what's in the Vanguard, what's in, these different types of ETF, it just makes you smarter. And then you guys be able to make greater and smarter decisions moving forward on your investment journey. And we're just going to look at this a little further. We're going to go down a little further. And what I really love about this, and especially Robinhood, it sets it up good, is boom. When you go down further now, you guys get to see who is the players, who's the big dogs inside the ETF, who are the companies that's leading the charge inside this ETF. And I like this in particular because most of the time when you open up these ETFs, and I'm going to be getting into the dividend stocks and the ETFs and opening it up so you guys can see, but I'm only doing this for this purpose right here. When you open them up, you get to see with your own eyes the big players. And these are the billion-dollar companies I be telling you guys about, that you don't have to buy a whole share. You can buy fractional shares in these type of companies, okay? NVIDIA, Apple, Microsoft, Amazon, Google A, Google C, Meta, Tesla. Hey guys, it's not financial advice, but if I was a young investor, I would be buying fractional shares in these type of companies. You know why? They ain't going out of business. Yeah, these companies, they go up and down. And if you guys learn how to buy on the dip on these companies, you're going to make a whole lot of money. Yeah, you're going to make a whole lot of money, and it's just so easy. I teach you guys. Start a year out, see what it was, figure out the all-time high and figure out the all-time low. You know what I mean? Write it on your little pad, and when you see it dip down there around that all-time low, buy that. Get you some fractional shares of these great companies. Yeah, get you some fractional shares on it. And what I like about it is you ain't got to worry about them going out of business. You ain't got to worry about them being there tomorrow. These companies going to be there tomorrow. And so what if the market goes down? You think if the market goes down that Microsoft is going out of business? Nah, I don't think so. It might go down. It might dip an all-time low. But hey, Microsoft ain't going nowhere. And if you guys can catch it on the dip, when it goes back up, you're going to make a whole lot of money. You guys think Amazon is going out of business? Do you think Apple is going out of NVIDIA, the big dog? You think Google's Broadcom? None of these companies is going out of business. I just showed you guys the cheat code on learning how to invest as a young investor. Because you guys, I'm putting you guys in the game to win. We trying to win. We ain't trying to waste our time with these little small companies that might be there tomorrow and they might not be there. When you could be putting your money over there with these big guys and making big time cash flow. You know what I'm saying? Big time cash flow. Okay? So, you know, always tell you guys, if you like this type of information, you know, it really helps if you guys subscribe, share, like, send it out to your friends. And let's build a community of young investors, and let's start growing our money and let's start talking about things that matter. Because I always tell you, young adults, if you 16 years old right now, you can start investing. You have to be 18 to invest in the stock market, but you can open up a stash app on your mom or dad's phone and you guys start investing together your $20, your $10, your $15 and say a company like Amazon, you know what I mean? Just say, for instance, you just bought this one company, Amazon, and you start putting up $50 over in Amazon. Look at the trajectory, what Amazon has started doing. Yeah, you'll make a whole lot of money. Matter of fact, just look it up real quick. Year ago, you could have got Amazon, shoes. You could have got Amazon down here at $188. But look at it where it's at right now. You would have made a whole lot of money. It's up in the 250s going to 300. You see what I'm saying? So what I'm just telling you guys is I just gave you the cheat code on how to do this, okay? Buy low, buy on the dip, okay? Pick you some companies out, hook it up to your mom's phone, download the Stash app, and put that $20, that $50 over into, and start buying you some shares of these companies. And then the caveat is because you got a 2-year early start, you take that money and transfer it out of your mom and dad's phone into your own phone. You already deep in the game 2 years, and you're 2 years smarter from just looking at the videos on Why Voices. You're going to be 2 years smarter than you was, and you're going to be on your investment journey. And then you guys start investing now. I predict that you'll work 10 years of your life and you'll make your first million. And now, since you got $1 million in your pocket, okay, you're waking up in, Hawaii, eating your bagel, your pancakes, looking at your phone, and you're going to be doing one of three things in the morning before you start your day. You're going to be buying some stock. You're going to be selling some stock, making money. And you're going to be going snorkeling. Yeah, you're going to be going snorkeling because you're going to have the whole rest of your day between 8, 9:30, 10 o'clock. You done made your deals. Now you go snorkeling for the rest of the day because you're not worried about losing your money because your money is only with the big companies. Okay? That's why I gave you guys the cheat sheet. This is the cheat sheet on how to do this. Okay? You guys don't have to be without, but you do have to build your own legacy. Nobody's going to help you build anything. Now, I always tell you guys can work 30 years or you can work 10. I suggest that you guys get started, download an app, a Robinhood app, a Webull app, a Fidelity app, an Acorn app, a Stash app. Download that bad boy on a phone. If you're 18, download it on your own phone. If you're 16, download on your mom's phone. And I want you guys to look at investing like this. Since you got the cheat code, Just don't go to McDonald's today and take the $15 and invest it every now and then. Just don't buy the Nikes, okay? Take the $50 and throw it over. Get the Nikes next time, okay? I'm not telling you young adults to live without anything that you really want. All I'm saying is every now and then, invest back in yourself by investing in the stock market, and you'll make a whole lot of money. And if you guys start doing this now, you'll be 28 years old. But the difference between you and everybody else is you're going to have about $1 million in your pocket. This is not financial advice, but I just love giving you guys a cheat sheet on things like this. So, with all that said, the VOO, that's a great place. Great place for you guys to start, okay? It's got the top 500 companies in it. A place that you can buy on the dip. Every time you see it on the dip, you know, always go back to the lowest point, try to find it on the dip. And when you see it down there low, buy it low, because it's just going to continue to go high. I always tell y'all, start over here, year ago, year to date, and just work yourself backwards. Man, you guys could have gotten, look at that, a year ago or 5 years ago, shoots, you could got it at $400, 386.13, you know, and it's just the type of company that you can invest in and you don't really have to worry about it. Okay, it's just going to make you continuous cash flow. What I like over time, it's going to make you cash flow, and so if you like these type of videos, likes, subscribe, share it out to your friends, and let's build a community together. And you guys take care of yourself. Be safe out there. Love you guys. I'll be talking to you guys soon.